Clay Trader, and this will be a video chart on Sponge Tech Delivery Systems Incorporated, ticker symbol SPNG. We've done this one quite a few times, and like I said in previous videos, one of those where it's pretty popular, so it's worthwhile doing it at least once a week. That way people can stay on top of what's going on from a technical analysis standpoint and just have an idea of what you want to see and don't want to see. I plan on still doing this one quite a bit as long as it remains as popular as it does. I know that a lot of people are benefiting from it, and it saves me saves people time from having to send me requests to do it. So let's dig in. The last time I did this video, the chart looked like this. We were pulling back, but we were approaching both the 20-day simple moving average, which is this maroon line, and the 50-day simple moving average, which is this purple line. And talked about how ideally we'd like to see the price act like that, where it got close to the 50-day here and then bounced off. And then, as you can see from the last time we did the video, came down here and put in a little doji candle there, and from there got a nice green candle, and here we are now. I will pull up a intraday chart so you can kind of see more of what's going on, but the key thing that's occurring right now is, actually this is a better way to see this doji candle that got formed right next to the 20 period and 50 period, so nice stuff right there. But the thing to keep in mind, and like I said, I'll show you this more on shorter time frames, is this aspect right here, the higher lows and then the higher highs. So yeah, as it is only 3 days, but for you short-term players, and everything needs to start someplace. So uptrends need to have a beginning. So this could be the start of what will hopefully be a nice bounce up to these levels here. But the point being, in the short term, we are in a nice little uptrend channel here. But don't take me wrong, in the long term, we're still in an uptrend. All you have to do to see that is look at the 200-day and 50-day simple moving averages, both sloping upwards, and that'll give you what the overall context is. Also, for an overall context view, pull up the 60-minute chart, and you can see that even on this one, sure, we're going sideways right now, but the 200 period is still sloping up. And if I really wanted to shrink this up more, you could see that we are still in an uptrend, but we're not going to do anything that skinny. What I wanted to hop down to was the 30-minute chart here, and this way can kind of show what's been going on in terms of the uptrend that we are in. So once again, this is a 30-minute chart, meaning each one of these bars represents 30 minutes worth of price action. But to illustrate this uptrend, it's pretty easy. All we got to do is take this and draw an uptrend line like that, and there you can see that since, let's see here, August 6th, which is down here, the price has bottomed out, and each time it made another low, came down here. Then on August 12th, bottomed out here, came up, and has since then putting in higher lows. And that's what I was talking about. Higher lows is always a good thing. And then if you want to narrow it down even more to this section right here, if we pull up the 15-minute chart, you can see that we have these higher lows also occurring. Low, 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 and even there's a higher low. Then we also have the highs. So any way you want to slice this pie right now, in the short term, remember that's the key word, short term, we are in an uptrend. In the long term, we are in an uptrend, but in the medium term, we are going sideways. This is the 60. If we draw a pattern like this, you can see price is, without argument, going sideways. So hopefully that makes sense. Short term, uptrend. Medium term, neutral. We're consolidating, and then in the long term, we still are in an uptrend. So make sure you know the difference there, and also don't let that confuse you. Hopefully you have a strategy going in, and depending on what your strategy is, you'll need to trade accordingly. If you're a long-term investor, then you have no worries because this chart's still in an uptrend. If you're a short-term day trader, then things are looking pretty good for you. If you're more of a medium-term player, then hopefully you're just trading in and out as we're getting going back and forth. So these trends really only matter towards whatever your strategy is. So keep that in mind. I know I'm kind of hopping around here quite a bit, but let's go back to the 30-minute here. The key resistance that I'm looking at right now is pretty much just based on this trend line here. You can see back here on the 4th, came up here, made a nice move, and then from there has kind of gone down, and then we put in this line right here. Let me extend this out a little bit. But as time goes by, this line gets shorter and shorter, and this is a 30-minute. So breaking a line, breaking this here, it's not going to say that the daily chart's going to explode, but getting above here on the 30-minute would mean on the 60-minute, we're also up around this area too, looking to get through. And if we can get through this area here, then that would mean on the daily chart, because remember, it's like a domino. You got to start on the small time frames and work your way up. So from the 30, you can break above this line. That would imply that the 60 minutes got a nice little chart going. And then eventually when we get back up to the daily chart, here we go, get up to the daily chart, hopefully we would then be making a run up here at this 16-cent level, which is our currently our key resistance level for the time being. After 16, we have this little double top area up here, which is at I believe 18 cents, and that'll be our next little area. But what I'm trying to illustrate is everything takes place. It starts on the short time frame. So from the 30-minute break, which would really start to bode well for the 60-minute, and then eventually the 60 minutes going to start to really turn solid for the daily chart as well. So keep that in mind. You may not be a big fan of those shorter time frames, but even if you just like the daily chart, realize that the daily chart takes shape from those lesser time frames. So it's worth at least watching those. You don't have to use them to trade, but if you want to watch them to see how things begin to take shape, then they're a great tool for that. So right now, going into next week, the chart is looking good. The last 3 days of this week, once again, put in higher lows and higher highs. That's a plus. We have the 50-day and 20-day below us as support. And then, like I said, on the resistance side of the coin, we have those trend lines on the 30-minute and 60-minute. And then hopefully on the daily, it'll get us up here to the 16-cent range. And then after that, the next key battleground is going to be up here at 18 cents. So that wraps up the chart for Sponge Tech. If you have any questions, please send me a message. And on another note, if you look down in the post for the free ebook, if you sign up for my newsletter, you will be subscribed and you'll get a free ebook with that. And also, you'll get free chart setups, free trading ideas, all sorts of things. It's all free, so it's worth at least checking out. No strings attached. So I'd encourage you to check that out. We've been having some good success in terms of profitable ideas. So I'd encourage you to check that out. If you have any questions, shoot me a message. But if not, once again, this was SPNG. Thanks, and have a good weekend.